Hi, good morning, traders. John Caruso coming to you here for the morning of March 15th, 2016 with your currency outlook for the day. First, we're going to backtrack a little bit. We'll hit on the ECB last week because I didn't have a chance to discuss that. Mario Draghi and the ECB, they delivered the bazooka on the market. They cut the refi rate, they cut the marginal lending rate, and they also cut the deposit rate, which initially sent the euro currency down approximately 200 points in the early going last Thursday, only to see it reverse approximately 400 points back to the upside after Mario Draghi issued a statement saying that he does not anticipate any further action from the ECB in the near future. So the market reversed 400 points off the low last week. Right now, we're consolidating sideways to lower in the upper end of that huge reversal candlestick we saw in the charts. And it does appear as if we could be gearing up for another run higher, perhaps to the top of my trading range in the euro, upwards around 114. So that's something to keep an eye out, especially ahead of the Federal Reserve meeting tomorrow. Now we're going to take a look in the overnight. Bank of Japan did hold steady on their negative interest rate policy. However, they did launch a negative outlook for the Japanese economy. So inaction as far as further decreasing their interest rates, as well as downgrading the outlook for the economy, that sent the Nikkei down. Right now, the Nikkei is down about 365 points, and it also sent the yen higher by about 100 points in the overnight. You got to remember that the yen and the Nikkei, the Japanese stock market over there, they carry an inverse correlation. And it does appear as if the yen is gearing up for another run higher. We do have some bull flagging action on the charts if you take a look at that. Also initially sent the U.S. dollar higher, traded on the high 96.90 in the overnight in the U.S. dollar. However, we do see the U.S. dollar back to unchanged to actually lower right now after we did see the retail sales data and the PPI data come out softer. Actually came out in line with expectations, but still soft on the reading. Retail sales was down 0.1%, but most notably, they did revise the January retail sales figures lower as well here in the United States. So not a lot of good news here on the heels of the Fed meeting tomorrow. Some other notable currencies that are softening this morning. Look at the British pound. British pound right now is down about 130 points, trading at 141.70. It did the most recent polling did show that the exit crowd for the exit out of for Great Britain's exit out of the European Union, the exit crowd holds a 2-point lead in the polls right now. It's still very early to determine, as I do believe that they vote on that in June. So still early to tell, but that's got the market a little nervous right now. Once again, British pound down 130 points, 141.70. Canadian dollar down 56 points, 74.83. If you notice, the Canadian did hit up against the 200-day moving average if we want to talk about the technicals. But if you want to talk about the fundamentals, what's driving it right now, the price of oil continues to weigh on that currency. It continues to weigh on the Canadian economy as a whole. So right now you got the Canadian dollar off 56 points, 74.83. You might find some near-term support a little bit lower down around 74, but ultimately it does look like that chart might be trying to tip over again. That's all I have for you right now. If you want to talk about some of the other currencies, you want to check out my market ranges, by all means, give me a call at 800-669-5354. Thanks a lot. Futures and options on futures may involve substantial risk. It may not be suitable for all investors.